with your Spark Finance business breakdown, giving you the most important business news that happened in the past week. So to start off with, I want to speak a little bit about Apple. So Apple has announced that they're actually increasing production on their new 5G phones. And we had talked about this in earlier episodes where we were discussing this 5G. This could be the next big thing for smartphones, right? It's the next kind of trend that's coming out. Apple announced that they're going to increase production to 96 million iPhones for the first half of 2021. So that is actually an increase of over 30% from the year ago period. So that's pretty significant right there. And on top of this, we also had this big kind of like news flash where we had a workers' riot at a Apple production facility in India. So this is one of the places where they were contracted to make iPhones. And you see the video where there's workers going and they're smashing cameras, they're knocking over furniture, they're breaking the glass. And apparently the dispute was them not getting paid, or they had pay withheld, and it sparked this kind of workers' riot there. And this was interesting from the perspective of, Apple supposedly takes this stuff very seriously and is now going to do an investigation into this. Once again, they subcontract this stuff out, so it could be going to like Foxconn in China, or it's going to other companies in India. And this was another important thing, is that this was a production facility in India, not in China, which we've primarily heard most of the production coming from for most goods and kind of mobile phones in general, right? So India is actually now the number 2 largest producer of smartphones around the world. They are catching up on China here. So if you look at it, it's kind of interesting from the perspective, it wasn't China or Vietnam, it's actually India. And India is doing some kind of revamps to their economic system and some kind of government policies that they had to try and bring in business from these other countries and become more of a manufacturing center. So that's interesting on that note as well. Hopefully this can get resolved. And I mean, that would be terrible if, imagine you're working and you're just not being paid, you're not receiving your paychecks, and they expect you to keep working, and then you have a riot that ensues after that. Next up, I wanted to talk about the biggest video game of the year, Cyberpunk 2077. So the company that makes this game is actually based in Poland, in Warsaw. So they have on the Warsaw Stock Exchange the shares of their company, and it was actually down 25% on this big news that came out. So you think the game, it came out, it had a nice launch, a lot of buzz for months and months. This is the third time they delayed it and they finally released the game. Now they're coming out and saying that they made an official apology stating that the game does not function, does not work properly on Xbox One and PlayStation 4 consoles. So a lot of people that were buying this game, for the holiday season were expecting it to work on the older generation consoles. Remember, not everybody has these new generation consoles that are just coming out now for the holidays. So they did this apology. A lot of people are actually doing refunds, and they said that they'll accept refunds for the game because of this. And the problem was that, this was delayed several times during the COVID period where they're trying to launch this game during a pandemic, which is very difficult with the change in the work environment. On top of that, they were trying to launch on 7 different platforms at the same time. So those two things combined, they just couldn't do it, and they didn't want to wait till they passed the holiday season. They put the game out in an unfinished state on these 2 particular platforms, and the shares right now of the company getting really beat up on that. So I thought that was pretty interesting. It lost $2 billion in market value based on this misstep right here. Next up, we have Astrazeneca. Now remember, Astrazeneca is working on I believe it was with Oxford, on their version of the vaccine. We have in the United States, we have Moderna and we have Pfizer and BioNTech. Well, AstraZeneca is now buying another company called Alexion for $39 billion. So not only are they working on vaccines, they're also making this big purchase here. They're doing a lot of new transactions, a lot of new things at once here. And the goal here is to get a foothold in rare disease drug Soliris, if I said that right, which treats a rare blood disorder. So this is going to help their future sales and create positive cash flow in the future. So they're kind of buying their way into more growth here. Next up, we have an announcement about the indexes and how they're performing over the course of 2020. The S&P 500 has done very well, but right now the Russell 2000 just surpassed the return for the S&P 500 for the year. So that's significant because the Russell 2000 is a list of small cap companies, smaller cap companies versus the S&P 500, which is large cap companies. So you're seeing people that were concerned with what was going on with the pandemic, going into more of the blue chip kind of companies, the ones that were more stable, more secure. Now it seems like people are transferring over to the more risky, the more future potential companies that are small caps here. So the last time the Russell 2000 outperformed the S&P 500 for a year was in 2016. So that was a while ago. So this is a major event that happened here. And it also shows a trend happening in the markets. Next up, the Wall Street Journal announced the top 8 best managed companies in the United States. So to start off with, they had, go through them real quick, the top 8: Microsoft, Apple, Cisco, Procter & Gamble, Merck, NVIDIA, Adobe, and Eli Lilly. And you notice Microsoft was on the #1 spot from that. I mean, that was their CEO, Satya Nadella. He came in 2014. And ever since then, he's really been doing well with the company. You look at it, and Microsoft is competing with Apple and Google and Amazon for the highest market cap company in the United States. I mean, they've significantly been on that list, and they're also, very competitive in a variety of different products. It's not just like one product either, and their stock price has been performing very well over the past, say, 5, 7, 10 years even. Next up, we have the European Union fining Twitter over privacy concerns. So this was something that's pretty significant because this is the first case that was brought under this GDPR law. And this was a privacy law that was enacted 2.5 years ago. And this case had a settlement of $546,000 against Twitter. And what was the major violation here? What did they do wrong? Well, they failed to document or properly notify the regulatory commission within 72 hours of learning of a data breach disclosed in January 2019 that exposed some users' private messages. So here we have the European Union really taking a stance on consumer privacy and using this new law that was enacted to go after, and in particular here, it's the American tech companies, which have been doing a different process with consumer privacy for a long time. Now, this is the first one, but it's the precedence for the other cases that are going on. There's Facebook, Apple, and Google all have cases that are being brought against them for this GDPR violations. A lot of people were upset, I guess, in the European Union by the delay that it took for the actual commission to come to a conclusion and fine Twitter here, right? So countries like France, they went and they have their own privacy laws and they're suing Google and Amazon, and they're doing on their own privacy laws, and they're trying to do it even before the GDPR can actually come to a decision on their lawsuits. So it's just a matter of time here before this changes the whole structure of how these companies can operate in the European Union and henceforth, throughout the world, because they're not going to change their policies just for one area. It's going to be changed for everywhere. This GDPR, remember how every site that you go on now, you literally have to click a little box that says accept cookies? I mean, if you went to the site, what are you going to do? Just say, I just went here just to close it again? You're going to have to accept it anyway. Does anybody read it, all that information? But it's to comply with that new rule that they came out with. The way these fines are going, if these tech companies keep getting fined, they're going to have to change their business practices. It's going to hit their bottom line here. Volkswagen had a big announcement. So this is one of the traditional car manufacturers, right? And the CEO, Herbert Diess, he says that he wants to refocus the entire company on electric vehicles, the way of the future. So he went to the board of directors for Volkswagen, and basically they put this to a vote. And the board actually sided with the CEO here to refocus the entire company on electric vehicles. So after this news, shares were up about 8%. And this is yet another company making the switch to electric vehicles. So now, 5 years ago, you would not think that electric vehicles were the way of the future. There were a couple of people out there that were stating that it was, the trendsetters. But we didn't know if it would really actually take hold or not, right? So now we have the Ford Mustang Mach-E, which has their first, I think it was like the first prototypes and everything went out now. So that's an electric vehicle right there, and it's getting pretty good reviews. People like it, and that's another major car company that's going into electric vehicles. The first edition of the Ford Mach-E is actually sold out. So now you have companies like Nikola and NIO and Tesla that have this stiff competition coming in. Because remember, these companies like Ford, GM, they make 10 million vehicles a year, well as where, let's say, the NIO and Nikola, maybe not so much, but Tesla does about 500,000 vehicles in a year. So if these other companies, including Volkswagen here, switch to electric vehicles, they could potentially have millions of these vehicles on the road in just a few years here. It's a lot of competition coming in for the upstart electric vehicle companies. Next up, we have a famous baseball player from the Yankees, Alex Rodriguez, who has decided to really go into real estate here. So he actually is going to join this company called CGI Merchant Group. It's a private equity fund. What they do is they raise a lot of capital and they invest it in different endeavors. So what they're doing right now is making a new hotel investment fund. So this was something I actually thought about too. Like, wouldn't it be a good idea right now to, buy maybe a little shopping mall or something like that? As a lot of businesses are closed, the shopping malls, the operators can't pay the taxes on it. They might have to get out of there. They can't pay the mortgage on the unit. So maybe it'd be a good time to buy shopping malls. Well, Alex Rodriguez from baseball fame is doing the same kind of thing here. So the group is trying to raise $650 million to buy properties and is in partnership with Hilton Worldwide Holdings. So he got started back in 2003 in real estate investing when I think he was still playing baseball back then. And if you look at it right now, they have about $800 million worth of property acquisitions in many different states that they've already done. So they're no newcomers to this process, right? And people were thinking, okay, these hotels, they're going to have to liquidate them. They're going to have to sell them because people must be losing money hand over fist. Nobody can go to the hotels. But then it turns out that if you look at the actual numbers, prices for hotels sold this year are only down 3.3% right now. So that's very insignificant, a 3% difference. You would think that there'd be 50% discounts on these hotels going for sale. But the thing is, these hotel owners, they don't want to sell the property unless they're on the verge of foreclosure and being kicked out of the units, because they know that the pandemic is eventually going to end, as it is coming out of the pandemic now with the vaccines, and they don't want to sell unless they're immediately forced to. So it's interesting that this company is going into it, but we're also seeing on the other side of it, these companies don't want to sell these assets for a loss. The Federal Reserve, Jerome Powell came out and he made all this information about what are they going to do over the next few years? What is their policies? What do they see the outlook for the economy? And it was some pretty crazy stuff. They said that they are going to keep rates low potentially until 2023. So they might have 0% interest rates until the year 2023. Wow, that's far off right there. And they will not raise rates until they see inflation go over 2% for an extended period of time. So once again, this is very, very accommodative policy that the Federal Reserve is doing. On top of that, they are going to continue their asset purchase, not increase, but continue their asset purchases. They're buying $80 billion worth of US Treasury bonds every month of the year. And then on top of that, they're buying $40 billion worth of mortgage-backed securities. So that's $100 billion every month that the Fed is buying and flushing money into the economy to buy these securities. And you can see now, we talked in previous videos about how warped the corporate bond market is, the sovereign US Treasury bond market is all, the interest rates are so low, you're losing money, you're guaranteed to lose money on these things. Well, it's pretty easy for an investment bank to go and buy a US Treasury when they can just flip it later on to the Federal Reserve, who has to buy, $80 billion of it a month. So it's pretty crazy here how this is just altering the whole market. Refinances, we talked about last video, up 65% for the year. So everybody's got these low interest rates, and that's what you should do to really take advantage of it, is refinance your mortgages if you can. So the last thing on here, they expect the unemployment rate to go down to 5% by the end of next year. That's pretty good. I mean, the unemployment numbers right now have been actually trending upward. If you look at the weekly jobless claims, I'll go more into that later on. But they expect it to get down to 4%, which is historically 4% unemployment means you're at full employment. There's always going to be some people that are not working for one reason or another, but they're expecting 4% by 2023. Because of all of this news about additional Fed stimulus, and then on top of that, we have the stimulus coming out of Washington, out of another stimulus deal that might be passed to just hand out cash to you and put it in your pocket, and do that by printing the money, of course. The US dollar index has been crashing lately. If you take a look at it, it's around like 90.09 on a recent one. And keep in mind, this is US dollar index is a basket of US currencies, of the US currency versus other currencies. So it's not against gold or like a physical asset or something like that. The other currencies are being stimulated in their environments as well. So they're printing money over there and those are going down as well. So it doesn't even show the true picture here. But it made a 6-year low it's a few percentage points off of a 6-year low that it made in 2014. So we're seeing this downtrend. And if you look, it's way back to May 2020. You look at a chart and from May 2020, it has just been going down the entire time till now. So if you look at it, that's right when they started enacting it after March, April, May period. They had to do all the stimuluses with the pandemic, and now you can see what happened from that. So can you really wonder that after all that stuff I just discussed there, that people are calling this the Great Reset? It's kind of interesting to see that. The weekly jobless claims, right? I was speaking about that. If it was trending down, maybe I could see the unemployment rate dropping really quickly, right? But right now, 885,000 people filed jobless claims last week, and only 818,000 were expected. So it's on a uptrend again from the week before. And we were doing like 700 for a while, and now it's starting to uptrend again. I thought those were all significant things, but once the vaccines are out and people are actually able to live in a normal society again and go outside, we should see the unemployment numbers come down. Lately. So to start off with, Robinhood, they got fined by the SEC for $65 million. A lot of money right there. And why did they get fined that much? For misleading customers. Of course, when they had this suit, they settled it and they didn't accept any responsibility, of course, because that's what they always do in these settlements. But the fine is based on the company falling short of the broker-dealer requirement to act in their client's interest. So once again, it's just some bad news for the Robinhood platform. Now, the company also had a number of technological outages on the platform. There was people that couldn't contact support, that had issues. A lot of these problems were going on. And they also said in the documents that it incentivizes frequent use, including allowing customers with no expertise at all in the markets. They might have never traded a stock before in their lives or even understand what the stock market is. And then it allows them to attempt very complicated trades and going into stock options and other types of trades that really people that have no idea how the stock market works shouldn't really be going into. Robinhood has over 13 million customers. This is one of the fastest growing platforms right now, especially for younger generations. And this is on top of, so they had this new lawsuit that was settled here. A previous one that was last year, they agreed to pay 1.25 million claims, $1.25 million. So this is to the Financial Regulatory Authority. So a lot of times they just keep doing these bad business practices. They're not informing the customer of stuff that they're doing behind the scenes. This was another thing here. They have deals with high-speed trading firms. So one of the draws of Robinhood is that you have commission-free trades, right? So you go on there and you make your trades, but the thing is that they're taking that information and they're sending it over to high-frequency trading firms to execute the trades. And the problem is this is kind of like the Wolf of Wall Street, right? When you have the spreads between what you put in as a market order, if you're not putting in a certain price that you want to execute your trade at. So you put in your order, it's a market order, they send it to these high-frequency traders, and the trade is executed at a little bit higher than what the underlying stock is actually trading at. That way, the company can kind of pocket those little differences in what the stock is trading at versus what the difference on the payment there. So they're making a little bit money on the spread. And that's something that they didn't even disclose on the Robinhood website until I believe it said 2018. So they would forward all of these orders to these high-frequency trading firms, sell them the knowledge of where people were going, all these individual investors and where they were investing, and those teams have algorithms that work off of that data as well. So your information's kind of like Facebook. They just sell your information for everybody else's use. A lot of this crazy stuff going on here, and yet everybody still likes to use Robinhood. I mean, when you hear business news speaking about retail investors, a lot of times now they'll even just say Robinhood investors, meaning, retail investors or new investors. And it's a very interesting concept. It reminds me back when people started saying, Google it kind of thing. When you start using it as a verb or when you start using it to describe something, it becomes a standard term. So no matter what, people are still going to go to this platform, ignore all the other brokerages that might be better off and are not getting sued for misleading customers. There's tons of brokerages out there, but people still go to this one. Next up, we have some news in the marijuana stocks. So this was a big one here because Aphria and Tilray announced a merger in an all-stock deal, and this was valued at $4 billion. So they are going to take this deal and create the largest marijuana production and distribution company that's traded on exchanges. So this is big. It's making the largest company. The new company is going to trade under Tilray's ticker symbol, TLRY. And then shares of both of these companies traded higher after the news, right? You had Tilray was stock up 22%, and then Aphria was up 2.75% to $8.34. And then Tilray was around $9.66 immediately after the news. It's fluctuated a bit since then. But if you look at some of the data for the year, through Tilray through Tuesday of last week, they've fallen 54% in 2020. While Aphria, they've risen 56% so far this year. So there's a big difference in how those two companies are doing, but they're hoping by coming together, they can have more say in the marketplace.